Good day, everyone, and welcome to today's discussion on international payments, built by or both. This is Nicolina from Connect Global Group, and I'm very pleased to have you all with us today. This webinar is brought to you in partnership with Form 3, and before we get started, I would like to go over some basic instructions so that you can all make the most out of this session. On your main screen, there are multiple application widgets you could use. All widgets are resizable and movable, so you can move them around to get the most out of your desktop space. You can expand your slide area or maximize it to full screen by clicking on the arrow in the top right corner. We would, of course, love to hear from you, so please submit your comments and questions at any point during this hour, and we'll try to answer as many of these as possible in the next 60 minutes. In case we don't manage to address all of your questions, we'll make sure to follow up with you in a separate email. Now, for the best viewing experience, we recommend using a wired internet connection and closing any programs or sessions that are running in the background. Finally, a reminder that a copy of today's discussion will be available in the next couple of hours, so please look out for that email. Now let's get started. Over to you, Luis.
Excellent. Thank you very much, Nicolina, and welcome everyone to today's webinar. My name is Lewis Ide, and I head up the International Payments Go-to-Market strategy and work with our customers to embed these services at Form 3. I spent around the last 10 years or so in international payments, really starting in AML and anti-financial crime before moving to SWIFT, where I most recently led the UK and Ireland region before moving to Form 3 about 12 months ago. I'm delighted to be hosting the panel today, and it's a pleasure to have you all with us. To really, I suppose, set the scene before we dive in, international payments really are undergoing a huge industry overhaul. I think there's a significant amount of focus from regulators, industry bodies, and firms in the industry to bring, I suppose, greater levels of speed, inclusion, transparency, and cost savings to international payments. And if we really look at, I suppose, the evolution of domestic and real-time payment systems, we've seen a real sharp increase in the number of those systems, up from around about 40 in 2018 to over 50 now in 2023. And I think by looking at that, around 70% of the world will have a live or upcoming real-time payments infrastructure. And really that's led to a view across the industry of how do we replicate the success and the value that real-time brings into the cross-border payment space. You have work from the G20, the CPMI, around enhancing cross-border payments, and a number of different stages and building blocks around that, with objectives for 2027. An example of one of those would be 75% of cross-border payments being credited within 1 hour of initiation. We also see the value of cross-border payments increasing and is very significant, with revenues in 2021 reaching a record $2.1 trillion globally, which was an 11% increase on the previous year, and planning to top out really at around $3 trillion by 2026. So really the pie is growing, but so does the complexity, and in meeting industry objectives becomes slightly more challenging, alongside aligning to technical and regulatory changes, as well as continuing to provide customers with value. So if we really bring that, I suppose, back into the context of today, we can agree that I think building an international payments offering can be complex, potentially confusing. Identifying things like the right partners to work with or areas that you're capable in to build yourself is not an easy task. And in this webinar, myself and as you can see, a group of payments experts will explore the benefits and the pitfalls associated with building or buying an offering, or how a hybrid of both of these things can bring benefit to organizations on this journey. And I think really understanding the direction of travel for the industry as it digitizes, adopts new standards, and opens innovation opportunities is really important as you decide on how to either enter or increase share in a market, and importantly whether to build, buy, or a form of both. So I am joined today by an esteemed panel of industry experts in their fields, and think this discussion will really be valuable for everyone, as we have some really interesting views from different parts of the industry. We do want to make today as practical as possible and ensure that we are leaving you with some real and tangible outputs to take back to your organisations. So without further ado, I'd like to introduce the panel. And in doing so, I'll ask the panel to introduce themselves, who they are, where they work, and maybe an opening gambit on where you see opportunities in the international payment space. So I'm selecting at random. Chris, maybe we can start with you, and then we'll go around. So just where you are, who you work for, and maybe just your thoughts a little bit on some of the opportunities for firms in this space.
Thanks, Lewis. Good afternoon, everybody. So my name's Chris Stairs, and I work as a senior solutions architect at a company called Valantic FSA. My role is primarily a pre-sales role, looking at solution possibilities with regards to customer needs, and taking those back into the organization and seeing how our solutions can help address those challenges that both banks and payment service providers and other financial institutions encounter with regards to the international and other payments space. I've worked with payments, I guess, for almost the last decade, but I go back a lot further than that, particularly in the integration space with regards to financial services messaging, straight through processing, automation, that kind of domain. In terms of opportunities, the opportunities are manifold in terms of the fact that payments are becoming more frictionless. The speed of payments, the expectations of customers with regards to the speed of payments, both domestically and internationally, is that the expectation is growing. And obviously, I suppose one of the biggest benefits of or opportunities is that other banks or banks operating in different countries see the possibility of being able to extend their markets and their reach into other domains, into other geographies, and so forth, and looking for solution providers that can facilitate the support for the different schemes, and also help them with their internal integration is one of the sort of key drivers. So I see that as one of the biggest opportunities, is trying to get into that domain where those banks can extend beyond their current borders, so to speak.
Excellent, thanks, Chris. And I think we'll definitely probably unpick that a little bit more as we go through today. So turning now maybe to yourself, Una. So a quick introduction and maybe where you see some of the initial opportunities for firms.
Sure, thanks, Lewis. My name is Una McGrain. I'm at Lloyds Bank. I've been there for about 7 or 8 years, but have about 25 years in total, always working in payments. So a bit of a payments geek, I suppose. My current role in Lloyds Bank is I look after FI commercialisation. So I'm responsible for the network that we build out to support our retail and commercial client payment flow. And I suppose from my perspective, as probably as a more established institution with a more established international payment offering, it's a really exciting time, I think, in terms of innovation. I mean, we talked about some of the traditional rail work with SWIFT's migration to ISO 20022 and the SWIFT global payments innovation, but there's an awful lot more range and variety in providers who are providing interesting solutions in terms of accessing international payments. But I think if we were to take it back to the 2 key priorities from us, Chris mentioned friction or frictionless. We still see quite a bit of friction in payments. So I think we are trying to reduce that, be it in terms of the quality of data that we're getting from our clients as they initiate their international payments. increasing our straight-through transaction flow, but also trying to decrease the investigation load we see after by looking at initiatives such as pre-validation or enhancing the quality of data at the first point of failure or friction to reduce it going forward.
Excellent. Thank you very much, Una. And again, I think we'll come on to some of those topics in more detail. And then last but not least, Mark. So again, quick introduction and maybe where you see the opportunities from your perspective.
Sure, thank you, Lewis. So yeah, hi everybody. My name's Mark Hewlett. I am Chief Operating Officer at Universal Partners. It's a cross-border business, primarily B2B, and I look after the operations team, the compliance team, treasury, finance, and risk. Before that, spent times at different places, eBree for 7 years, then Revolut for a short space of time, and then BVNK. So I've been around some of the more innovative firms, worked with Form 3 on directly connected, non-settling with fast payments a few years ago. That was a fun project. When it comes to opportunities, I won't go into too much detail, but I'm quite bored talking about payments. I'm a payments geek, I love payments, but I find payments quite boring. What I'm more interested in is helping customers sell more. A lot of payments firms, and with all due respect to everybody that's set up a payments firm, it's quite easy to set up a payments firm now. Now, there are challenges, but I think people should be looking at more at how they can help their customers collect funds, help their customers sell more instead of paying people. If you have to pay people, especially salaries, that's an important one. But I think when it comes to the payments industry, I'd rather talk about the collections industry as opposed to the payments industry. How can we help customers sell abroad and using cross-border rails to do that, whether it's SWIFT or local ACH or card, whatever. I'm really interested in looking at businesses, and something we're trying to do here is help our customers sell more and grow with those customers. So I'd like to touch on that if we can at some point, but that's me and what I'm thinking about.
Excellent. No, thanks, Mark. And definitely I'd be keen to sort of pick up on a few of those points as well. And I think, as we talked about it in the opening, I think making some of this discussion very tangible. So looking at the value creation for your customers, and those customers will vary depending on the type of firm, and understanding your customers is going to be a big part of that. So thank you very much for the introductions. We kind of mentioned opportunities, and I think very much linked with opportunities is then the discussion around some of the challenges. And maybe this is where we can pick up on a few of those points. So maybe if I can just go around and ask you for each, maybe one or two of the big challenge areas for, new and existing firms that are either looking at kind of growing out their international book or, starting from scratch. So presumably we're going to be looking at things like compliance and AML, knowledge and know-how, understanding your customers. Do you build? Do you buy? Those types of things. So maybe Mark, if we come to you, because as you mentioned in your introduction, you've done this and you're currently building it out right now. So it'd be good to get your perspective on maybe some of those challenges that you faced and maybe how you've overcome them as well.
Yeah, I think the important thing is this, especially in fintech, there's an awful sense of entitlement around banks should give me accounts. They don't take into account the huge amount of risk that a bank is taking on. In actual fact, banks are usually taking on more risk than the business themselves is willing to do, and that's make payments for a third party that don't have a direct relationship with. You've got to be really empathetic when you're dealing with a bank. Do your research. Don't just expect, like I say, the entitlement thing does drive me crazy when I hear people complaining about banks, because I think they do sometimes get an unfair rap. So know your place, know the bank, look at their risk appetite. There's Payments Association did something last year. I think I was involved in that. Useful document to tell you what banks are willing to do what. Appreciate that the cost to serve a fintech is incredibly high. So it might be the case that you're not commercially viable to a bank. So look at a white label. There's plenty of names out there. I won't give them any more publicity because everybody knows who they are. But there are some really interesting firms out there. But have the empathy with the relationship manager. They have to do a huge amount of work, and you'll save yourself a lot of time and frustration if you do your research. That's been my biggest thing to think about when approaching a bank to expand, or a provider to expand your capabilities. What verticals are you serving? Is it B2B? Is it C2B? Is it B2C? Are you dealing with high risk jurisdictions? Do you know what a high risk jurisdiction is? There's lots of fintechs out there, and I used to use the line, you know, are you a fintech capital fin, or are you fintech capital tech? You know, are you a tech firm that moves money around? Are you a financial firm that uses tech? Look at that and make sure that you're speaking to the right people.
Excellent. And maybe just to build on that, Mark. So obviously you've been at Universal Partners now for a few months. So how have you found the kind of the first few months in picking some of this stuff up where you are today, and understanding the verticals that you work in, and then applying that to the kind of the value creation piece that you mentioned at the start?
Yeah, like I say, I'm a payment stroke collections geek. So my role here has been, you know, we've got great partners that we're working with already. We're expanding our partnerships with new partners that will give us better capability, whether that be virtual accounts that we can use to give customers the ability to collect funds globally in, you know, 30, 40 odd currencies. So what I'm doing is just scoping out. We've done a lot of work at the moment on onboarding and automating that process further. We do a good job currently, but we could do a lot better. So we're working on that. What else are we doing? Transaction monitoring, screening is something we're big on. Well, as everybody I hope is in our sector. Be a worry if you weren't. But yeah, we're just building the whole tech stack, not from scratch, because we've got good partners already, but we're certainly doing more via API, doing more via cloud-based providers to try, and everybody tries to future-proof themselves, but we're trying to make sure that we are multi-cloud, API, all the usual buzzwords is something we're looking at, but using providers that can grow with us. We've got big growth plans for the next couple of years, so we're going to be, you know, opening offices internationally. We need partners across the whole tech stack. Wherever possible, we want to be using the same tech in Spain as we do in the UK, as we will do in Asia. That's a big thing for us. We're looking at partners that can support us on that growth journey.
Awesome. Thanks, Mark. And then maybe Una, sort of pivoting to yourself there. So maybe some of the challenges that you see from your perspective, and maybe some comments around those as well, if we could.
Sure. I think, as well as the, you know, clearly the whole onboarding journey and the tech infrastructure and how you want to engage, it's really key to understand what that is. I mean, Mark talked about replicating it depending on, you know, what jurisdiction you're looking at, but certainly whether you're looking at some of the traditional MT types with the lens on Swift MX, either 20 or 22. We're also increasingly looking at API, particularly for that data exchange around the transaction lifecycle. I think there'll be a lot of mention of the word friction, but also to think around the operational infrastructure that you have around that transaction generation, in terms of how you can support it, how you can manage if queries or returns come in, and how you have that whole wider client service support for the payments proposition, or indeed collections proposition, that you are offering your clients. We're looking increasingly, as I said, about the sort of the wide range of data that needs to accompany a payment now, that isn't just an account number or a clearing code, and they can vary massively jurisdiction on jurisdiction. So how you can prompt your client for those as quickly as possible, in a seamless way, to get everything going with the transaction that it needs to, would be also another thing to think about.
Excellent. No, thank you. No, and then maybe Chris, so slightly different angle from a technology perspective, but maybe some of the challenges that you've seen with maybe both new and existing firms on this kind of journey. So maybe some of the challenges that you've seen.
Sure. I think it can all be boiled down, or a lot of it can be boiled down to compliance, and particularly around the proliferation of standards. So, you know, different schemes have different standards, and, you know, there is this perception maybe that ISO 20022 is this great unifying standard, and it is to a large extent. But I think what people don't realise that is how many different flavours of ISO 20022 there are. So whilst the message contents may be broadly similar, the usage rules, the rule book, validations, etc., they vary from scheme to scheme, from country to country, from implementation to implementation. So being able to keep your arms around all of those subtleties and nuances around the different flavors of particularly ISO 20022, but scheme compliance generally, that's one of the big challenges that I see for whether it's a more traditional bank, or whether it's a payment service provider, or a neobank, or a challenger bank type of infrastructure. Is you can have as much modern infrastructure as you like, but keeping your arms around all of those differences and nuances and different flavors of the standards that need to be supported, the workflows, because broadly they're the same, but there are differences, so you have to cater for those differences. And then, you know, each bank or each financial institution will have its own particular flavors or requirements of how it wants to process, integrate and process payments in terms of workflows. So I think for me, those are the big challenges. People talk about ISO 20022, but you know, there is no one size fits all.
I was wondering how long ISO would take to get into the conversation, so I'm glad you beat me to it, Chris. But I think it's certainly a key point, right? And maybe just sort of a quick follow-up question there. In your experience, how well placed are firms to deal with the new standard around ISO? And as you say, there's many different flavors. New firms, existing firms will have very varying degrees of knowledge on the topic. But how have you seen, from your perspective, how well placed some of those firms are to deal with this?
Well, I think the fact that, you know, CBPR Plus, the November go live had to be delayed until this month for CBPR Plus, tells you a particular story about how well placed firms are to actually handle that. So I think there are challenges there, definitely, in terms of the firms being able to, or banks and financial institutions being able to kind of keep ahead of the game, because the thing is, it's not like we're aiming for a particular point in time. You know, it's a constantly moving target. So we know that between now and 2025, there are going to be more. There's going to be more momentum, more cadence around those changes, not just in the SWIFT world, but in other jurisdictions and other geographies as well. So obviously working with partners that specialize in that kind of endeavor. So, you know, if we think about Form 3, you know, Form 3, the way that Form 3 handles all of the scheme rulebook changes, etc., in terms of connecting to clearings and so forth, and then presents that as a unified API, makes that life or that job a lot easier in terms of being able to remain compliant and keep up with the regulatory changes.
Great, thanks, Chris. I appreciate that. So that's kind of, I suppose, touched on a few of the challenges, and I think we'll come back to those as we kind of get stuck into the next part. But what I'm keen is to kind of pivot into international payments and really look at, I suppose, the different use cases for international payments. I think we can have the big banner of, yes, it's moving money cross-border, but there are different ways and different mechanisms, I suppose, that we can do that. So, you know, we've already touched on SWIFT a little bit in the commentary. There's also mechanisms around ACH. We see different types of interlinking of cross-border and real-time systems. Mark, you mentioned sort of third-party white label firms. So what I'm keen, maybe Mark, coming to you first, is from a value perspective to your customers, how do you break down the different types of payments that your customers require? And does it change the solution potentially that you provide those customers?
Yeah, it's all about the scheme. I think I was thinking about this earlier on today, and I think most payments firms, or the good payments firms, are just the best sausage producers. You don't really know what goes on or what goes into the sausage, but you get a nice experience, and your payment gets there. Our customer base, it's not necessarily speed. I think you mentioned the figures regarding payments in under an hour. It's great. What our customers want is certainty, and we could go back to another food analogy. They want a McDonald's. If we're saying we're going to get their payment to them, they don't care if it's US dollars, Botswana pula, or South Korean won. They just want the money to get there when they're on the value date. That's key. So we could use, we work with lots of different partners. We could use regional banks that have got access to Asian liquidity and payment schemes and can do via the faster payments equivalent. We can use SWIFT for some of the other payments, and we'll do that from London, and we can cover most currencies on the planet. So in reality, the use case or our customer demand is get the money where it needs to be on the date that I need it to get there, and then we do the work. Yeah, so that's we are the sausage producers in that, and I'll we're good at it. But that ultimately is it's a blend. It's all sorts. We look at Swift, ACH. You can use third parties. You can use banks. You can connect to schemes. You can connect to SEPA. You can collect faster payments now. There's more. Canada are looking at doing something similar. So depends on your customer base and what they need. Sometimes it's just really cheap, in which case it's going to be pretty slow, and you might not get the clarity that you need. But if you want to give your customers a lovely Swift GPI GUI where a customer can see their payment along the whole chain, which our customers do, that's something that you need to be able to offer. It's on a case-by-case basis. I can speak from personal experience. Most of it's been B2B, and it's certainty, not necessarily speed or cost. It's that the funds will get there on the day, and you can use, there's lots of different ways to make that happen.
Excellent. No, thank you. I think that's really interesting. Certainly, I've not heard the McDonald's analogy before when it comes to payments. So you going back to your payments geek piece, I think that's I'll probably steal that one. So thank you. Maybe pivoting to you on this one, Una. So obviously, maybe a slightly broader range of types of customers that Lloyds support. How do you see this? So again, sort of Mark mentioned certainty being the real key piece. I think, we definitely heard that certainly from a treasury perspective, looking at cross-border, it's the certainty rather than necessarily the speed. But how do you see that in terms of the different types of customers that Lloyds support?
I think it's when you talked at the beginning around the CPMI work of looking at what are the real blockers in the international payments change and what are the roadmap. We've spent quite a bit of time at looking at the cost and the speed and the transparency, and I'd agree with Mark. I think what we see on the speed of transaction side is certainly are lining up with CPMI standards. Nearly 75% of our international flow gets to the beneficiary in 30 minutes, so you can kind of tick that box. But I think increasingly we look at the cost and the known elements, the transparency of the transaction, so the cost to the client, an FX rate if applicable, and also that finality journey. So if I make a transaction that I know it's going to get to the beneficiary, that I know I have the right information in it, that I'm not going to find out 2 to 3 days later that it got lost somewhere in the journey or it got paused. But I do think increasingly, maybe tied in a little bit with speed is we've talked a little bit already around access to immediate payment schemes. I think a lot of the initial historical kind of correspondent banking payments were very much wires or high value transactions that didn't necessarily avail of all of the payment schemes that Chris talked to, that all have their different standards in there. So there's increasingly more optionality about not just the currency that you're offering, but the payment scheme that you might want to reach into. And that just ties in, I think, to your client proposition. What is your geographic reach? Where can you actually access clearing yourself? If that is an option to you, if that's something that you want to do, is a key one. But I think, on the cost and the reach we're increasingly looking at, and I think the immediate payments or a faster payments offering is not necessarily speed, but if you domestically can make a payment 24/7 when you need to, and you can do a confirmation of payee and you know that the beneficiary account number is the right one, and you kind of have that faith before you initiate a transaction, and then you know that your beneficiary has received money, and that's your experience domestically. Why is it too much to ask that might be your experience on the international side?
Yeah, I think that's definitely an interesting point. And maybe just to pick up on one thread there, we mentioned sort of optionality. So we talked about Swift, we might talk about sort of cross-border ACH. So maybe Chris, from your perspective, when you start adding in these different types of options into a payment journey, I suppose from a valantic FSA perspective, how do you guys think about things like orchestration? Because I appreciate that's going to become fairly important if you've got one channel to a customer, but many options in the back end to provide that experience. How do you guys think about that orchestration piece?
Yeah, so based upon what Mark and Una have said, one of the challenges that we see, particularly let's say the more traditional banks with very disparate sort of landscape in terms of applications, channels, supporting systems, etc., is the ability to stitch all together all of those moving parts into a coherent, unified sort of set of workflows. So that's where an integration and orchestration platform comes into the picture. And the traditional, let's call them payment engine vendors and so forth, their platforms are, by today's standards, quite legacy. They're monolithic, they're quite inflexible. They don't have the agility or the flexibility to be able to handle that kind of variation in the timeframes that are required in order to sort of keep up with the marketplace and so forth. So from our point of view, what we provide is a highly flexible, modular payments integration and orchestration platform, that allows us, through our no-code development platform, XGen. So we built our platform using XGen, and it allows us to be able to integrate with different ways of getting payments into the institution, whether that's through APIs, whether that's more through traditional methods like secure file transfer, MQ. That sorry for getting a bit kind of technical, but these are the sort of these are the things that have to be considered. But then also be able to push those payments through various life cycles, and they differ from from scheme to scheme, from payment type to payment type. Obviously, international payments have a few more steps into them within them than, say, domestic payments. So the ability to be able to stitch all that kind of stuff together, and also be able to dynamically route the payments to the appropriate endpoints, handle exceptions. So the idea is to drive as much automation and straight through processing as possible. So Una mentioned about filtering out exceptions as early on in the process as possible. So being able to do that pre-processing, that validation. Obviously, anything that ticks all the boxes gets let through the gate. Anything that doesn't essentially gets pushed to one side. And part of our payment suite platform is also an extensive investigations and case management capability as well, where the customers can actually define their own workflows and rules for being able to handle those exceptions. So it's really a case of trying to drive as much automation and straight through processing as possible, simplify the integration touch points, but also providing clarity in terms of investigations and case management.
Excellent. No, thank you, Chris. I think that's absolutely fine to go into some of the technology pieces. I think it's why we've got a broad range of us today. So appreciate that. Maybe if we look at a particular kind of use case or example. So if we took a cross-border payment with FX. So Mark, maybe going to come to you for this one. What are the key things for firms to consider? So if we kind of started on a bit of a life cycle journey here. So how do you go about finding a bank partner? What are the things you need to consider, whether it be sort of AML policies, EDD sanctions? Do you get into things like the Wolfsburg questionnaires? So from your perspective, going out and looking at that space, what are the key things for people to consider?
First thing first, get the FX people and the transaction people in the same room. Sometimes they don't even know each other. True story. I've been at a number of banks and they're on different floors. They don't. But I'm doing the introductions. These people have never met before. So for God's sake, get the FX people and the transaction people in the same room. And then you're right. It's the whole onboarding process. Whatever timeline I give you, it's a fallacy. It's going to take a lot longer than everybody expects. Some banks are better than others. I'll be honest. They've got a more thorough and well-trodden path of onboarding payments businesses or other banks. But a lot of the times, if you're doing FX and payments, they're two completely different beasts, and both got probably different integrations as well. You do your fix for your FX, and then you do your API or Swift for your payments. So most important thing, get them in a room together. Then, yeah, keep regular. I've got a really worn out playbook on integrating with banks. I've done it with dozens over the years. Regular touch points, get a really good project manager on both sides that keeps everyone aligned and keeps everybody honest. Make sure you yourself have got your bits and pieces up to date. There's, just really, we're going through this as a life cycle. Your proof of addresses for your directors, keep all that up to date. Make sure everyone's managing that folder in your shared drive. And make sure your compliance team are very well prepared as well. The compliance team, you know, we have site visits, or we will go to them, or they come to us, or we'll do a call like this. Make sure your compliance people are really on point and are well rehearsed, because it is an interview. The bank, like I said at the outset, the bank is doing something you're probably not willing to do yourself, which is take incredible risk by moving money for somebody they don't have a relationship with. Keep abreast, you know, make sure you're abreast of current technology, and just be well rehearsed. Don't think it's going to be an easy ride, and it's definitely going to take longer than you expect. But yeah, make sure the stakeholders their side are aligned as well. You do need to, and it depends on the bank, like I say, but a lot of times you need to really manage that relationship from start to finish, and you know, keeping everybody on side, both sides is. It's a bit like being a parent to a certain degree. It's opening an account. It's interesting, but you know, banks are getting better at working with non-banks or other banks. Everybody realizes that it's a symbiotic relationship. It's great for the bank, and it's great for the provider. And more importantly, without wanting to sound holier than thou, it is great for the customer, because you can get multi-bank capabilities through one platform. So everybody does benefits from it.
Yeah, excellent. No, thanks, Mark. I appreciate that. And I suppose moving through then sort of the flow, if you like. So we've kind of maybe a little bit on the FX and the onboarding, maybe taking a different track with yourself, Una. So you mentioned already kind of frictionless prepayment processing. So what are some of the things that you're thinking about at Lloyds when it relates to kind of prepayment processing? And we've kind of touched on ISO as well. So I'm sure there's an interlinkage of some of those things with the higher quality data. But maybe you could touch on some of the things that you're focused on, or maybe that you'd recommend other firms look at in this space.
Definitely. But first of all, I just completely agree with Mark, and think of your FX and your payments journey together. You're not just providing, or what is your client proposition? Are you just offering FX services, or are you offering a payment? And you're offering a payment with an FX. Think of your poor client and the journey that they are going through, and what they expect from the service. So I really love that. But in terms of what else I would think of is, or what we think of is, absolutely in terms of that end-to-end payment sharing, what is the information that you need to capture from your client at the very beginning, and how do you pass that on? But also, as Chris talked to, the the concept of that sort of the scheme rule book, or the payments rule book for whatever markets or schemes that you're planning to tap into, not just having that, and maybe in a static level, like having an actual rule book, or having something that you build into your client channels at the beginning, but also how you can respond to change, and how you can be more agile. Because I think certainly over the last, even 5-10 years, the variances and the differences that come across in country and clearing scheme moves change a lot more dynamically, and they change quite quickly. You could find out that somehow a payment that you were sending with a certain point of data as of the first of the following month is no longer acceptable and needs additional data points. So how you can respond to that in a nice agile way, and then relay it back to your customer. And as Chris also points out, we service a wide range of clients with a wide range of channels. So it's how we can kind of align that journey, so each client experience is the same. Each client experience rather gets the right level of data for the right international transaction that they're trying to achieve in the sort of the client journey, or the experience that they're used to getting it in. And it ties in with either the invoice they're trying to settle, or the payment they're trying to make to a friend. So I think there's a lot in that. So to that, we're looking at sort of international pre-validation models, such as the SWIFT one, but also I think and Chris talked as well to the exceptions and the investigations piece. I remember working on a body of work looking at SWIFT standards in E&I in 2005, 2006, and I think a lot of it was around, we'll do ISO type XML standards, and we'll all share the same sort of status, and we'll share the same message types, but intrinsically it was just kind of repeating the same process that we had already, where you've just got a bank sending a message to the next bank in the chain, and we just keep doing that till we go around. So I think some of the work around getting the right message to the right party in the payment at the right time, so not sending the same message to 6 times to 6 different banks. So I think the work that's being done around there is a little bit more, probably a bit more will hopefully be a bit more successful in terms of reduce when there is a friction, or there is beneficiary claiming non-receipt, or a payment has to be cancelled because the incorrect data has been given with it, that you can respond to that in much more targeted, efficient time frame.
Excellent. No, I really appreciate that. And Chris, I'm going to come to you in a second because I've got a question for you on technology. But just before I do, Mark, we've kind of touched on well, you mentioned sort of white label, sort of direct to bank, and some of the different options that you have as you're kind of sourcing liquidity. Have you got any sort of advice for maybe for newer firms on this journey about what is the right point to kind of buy something off the shelf, build something, or, you know, I'm kind of using the build, buy, or both here, but what would you say in terms of finding that liquidity and your experience?
So finding liquidity is relatively easy. I used to joke, you know, FX is a commodity. Yeah, I could walk out of a sandwich board, say we'll buy FX for cash, and I'd have FX liquidity. The payments is the really hard bit, and that integration work. It's talent. You know, talent's really hard to come by, especially experience in cross-border payments. So look at, do you have an internal team or internal group of people that can do that work or build something? Now, a lot of firms don't have it, you know. So you work with a partner, and there's great firms out there, you know. It's a talent thing. So look at what you've got, and that will ultimately dictate if you're able to build or if you have to buy. You know, I'm a big fan of partnering with good best-in-class firms to do that work for us, because it just increases your speed to market, and you know they have that expertise. So I'm a big fan of partnering. I will build what I need to create IP, but like I say, we go back to the sausage factory analogy. The big dirty secret of payments businesses is they're pretty much all driven by banks ultimately, whether you're a white label producer, whether you're doing it through a white label or you do it directly with the bank. Banks are ultimately doing it. So just do what you can in that respect, I think is where I'd take that one.
And I think, Mark, so just following on from that, you know, that whole thing about best of breed, you know, the days of, you know, one size fits all and everybody being able to, or a single vendor, if you like, or a single supplier being able to do the entire gamut of things is well in the past. You know, as you say, it's much better to partner with different vendors or different suppliers that specialize in particular activities. So, you know, for example, in our case, we don't specialize in AML or fraud, you know, so let's integrate with, you know, the best of breed in that domain essentially.
Yeah, I've seen lots of firms. I have done consultancy previously, and I've seen a lot of firms that are desperate to build IP to the detriment, and they've become a jack of all trades, master of none. And then, ironically, they sell themselves as tech firms, but ultimately they're sitting on their own legacy because they've built something and it's just isn't fit for purpose and doesn't scale. So yeah, I'd agree. You know, partner wherever you can, especially in such an important sector. You know, when you're talking AML, KYC, and transaction monitoring, why on earth would you want, unless you're building a firm that can sell it to other firms, why on earth would you want to do that yourself? What's the best that can happen there? You're not going to stay on top of things.
So you have to be careful, Mark. I think people are going to be asking for your playbook after this. You might be in demand.
It's very expensive.
But sort of keeping on the technology point, so maybe Chris, coming to you for this, we kind of talked about technology. I think we're kind of leaning towards, you know, cloud-based APIs, microservice architectures. That type of technology is, I think, to Mark's point earlier, is, you know, the buzzword technology piece. From your perspective, so how do sort of banks or firms go about this journey? Because it's not a case as simple of, you know, ripping out what you have and replacing it all in one go. I think that's been sort of, it's not the right approach. So how do firms look at that estate and manage that migration from where they are today to the kind of microservice API cloud native solutions?
Yeah, as you say, rip and replace is just, it's not a viable option. You know, if you take an organization like Lloyd's, I'm sure Una would agree, you know, so many moving parts, so many different systems, you know, all different, you know, that have to talk to one another. The feasibility of just being able to say, right, today we're going to be running the old system, then we switch it all off and we go over to the new system is just not feasible. So being able to introduce that technology in a transitional way is a key capability. And as you rightly point out, cloud native applications and SaaS are definitely gaining currency in the marketplace, even with, certainly in my experience talking to some of the, let's say tier 1 banks, multi-country banks, they're looking at making that journey. They've obviously got a lot of resources tied up in, in provision of infrastructure and so forth. I think there is a little bit of a reticence, not so much from the people that want to make it happen, but more from their own risk and compliance divisions saying, whoa, hang on, let's not get ahead of ourselves here. So one of the things that I've seen is that, the larger banks definitely want to start moving in that direction, but maybe in a transitional way through, say, private cloud. So rather than going full SaaS, outsourcing everything, they might want to sort of go private cloud, cut their teeth on, understanding what's involved in internally providing those solutions in the cloud, and then using that as a stepping stone to maybe the sort of full outsourcing experience. Also, the other thing to bear in mind is that cloud native is not the same as cloud compliant. Okay, so cloud, pretty much any application can run in the cloud. You can do a lift and shift into the cloud, and the application will run, but you probably won't get the cost savings that people think they're going to get by running stuff in the cloud, because the infrastructure, the cloud infrastructure that's required for running those traditional applications is still going to be, fairly prohibitive. So you need cloud native applications that are multi-tenant, ideally, where you can sell, let's call it the pizza slice, as opposed to the whole pizza every time. So that's one of the other considerations. Loosely coupled microservices-based applications. So you've got applications that are not these big monolithic blocks of functionality, but are actually broken out into separate services or modules that can then essentially be deployed as what appears to be a coherent application, or what is a coherent application. But those various services are independently deployable, independently scalable, so that you're getting the best use of the platform resources. So what you want is essentially applications or services or solutions, platforms, whatever term you want to use, that give you that elasticity, because that's where you start to derive the economies of scale. Traditional platforms or applications, you'd have to size the platform for the highest throughput that you could potentially encounter. And that might be only 5% of the time, maybe even less. So you've got this massive amount of resources sitting there that's only ever optimized or maxed out sort of a very tiny percentage of the time. So if you've got applications or platforms that are inherently elastic, that can be scaled, the various components thereof can be scaled independently. They've got fault tolerance, resilience, all of that kind of stuff. That's where you're going to start to get the the economies of scale, both as a supplier, but also as a consumer as well. Because one of the capabilities, or one of the features, I think, is that we're starting to see with cloud-based platforms and true microservices-based platforms, is that generally they're available through subscription, as opposed to a large scale sort of capex type of engagement beforehand to actually get the funding for. So often they can fall into more of an OPEX type of business as usual type of approval process, as opposed to the more traditional going cap in hand to the board and saying I need 10 million pounds, dollars, euros, or 20, 30, however many it is. So I think that's also one of the drivers of this kind of migration, or this movement towards the cloud. And just finally, also cloud vendors, cloud providers are providing access to their services through standardized APIs. So the ability to be able to consume those services in a very standardized way, without having to have all of that underlying, or having all of that underlying kind of integration complexity sort of being abstracted from the end consumer.
If I could just add, that's a really good point, Chris, that I forgot about actually in recent months, is that the fact that you can consume these microservices, your chopping and changing can happen far more frequently because you haven't got that sunk cost, and it does keep the industry on its toes. Everybody, because if somebody offers a better product than what you're currently consuming, you're not tied in. You might have a year-long contract at best, or 6 months notice. You can really have good conversations with new suppliers, current supplier, tell them to up their game, because it's easier to move away. So I think it's the unintended consequences of microservices and cloud are really good. The positive ones, and they far outweigh the negative ones. So yes, reminder for myself there to keep on top of our suppliers.
Yeah, absolutely, Mark. Like you say, and if the consumption of those services is enabled through kind of a standardized API framework like REST or something like that, then you haven't, okay, the devil's always in the detail, okay, but by and large what you've got is a standardized way of being able to consume those services, so you can switch out an existing supplier and switch in relatively easily without too much pain and anguish, having to basically throw away loads of capability, because you're essentially replacing like with like.
Yeah, it does remind me of one of my biggest frustrations in the industry, though, especially on microservices and SaaS models, and is the lies you get told by the salesperson about how quick it will take to integrate. And they are lies. I'm not even going to beat around the bush. I get lied to a hell of a lot by providers telling me how easy the integration will be. That really does need to change in the industry. I think we need to start holding these people to account that 2 weeks integration for, it really drives me crazy. And it seems to be, certainly in the RegTech space, I think it's RegTech that actually come up with this more than others. I think that's a particular industry that trying to win at all costs, even if that means just blatant lies about integration.
No, absolutely, and I've been around for quite a few years, and I've worked on that kind of, let's say, being shafted side of things as well, by being sold something that is has been badged as being something that you can implement in, say, a month or 2 months or something like that, and you look at it, you just go, there's just no way, kind of thing. So,
there is a provider that I've had the same deck from them over the last 3 years, with the roadmap still looking the same, just with different dates, so the same countries that don't have the capabilities. And yeah, it's 3 years out of date, but funny enough, I did a comparison the other week, and they are the same one.
Not naming any names, Mark.
No, definitely not, but they know who they are.
Excellent. So look, I think we are sort of almost at the top of the hour, and I think this has been a fantastic discussion thus far. Lots of different topics covered. Really like some of the discussions around the sort of the optionality piece. Mark, kind of covering off some of the pieces that you need to think about in terms of know your place. I think that's a really interesting concept. So what I'd like to almost do is as a bit of a wrap up here, is to kind of go around and maybe take one or two key takeaways that you would like to leave the audience with. So what are the two things, if you're only going to do two things, what would you recommend in order to get some kind of advancement, some kind of positive gain in the next sort of 6 to 12 months for these firms? So maybe Una, if we could come to you first and get your kind of closing thoughts, or what would you kind of recommend?
Sure, I think well, it's pretty topical to bring up ISO 20 or 22 again this week, having just gone live with CBPR Plus and Target 2. But I think Chris talked very nicely too. You know, there isn't just one ISO standard. Payment schemes do not just use the same one, and it's not a pick and drop. So I think over the next the next 2-3 years, as all of the banks and all of the payment infrastructures move into that ISO environment, to have a more considered lens about interoperability and the sort of the standards that we can use cross-border as well as domestic in scheme. And to that end, probably the second wish would probably be on the immediate payments cross-border access. So it's something we offer to banks into the UK. It's something we're very interested in terms of some of the developments like the MPP in Australia and Fed now in the US, to see that you can maybe tap that bridge. I mean, we talked about speed maybe not being so of import to certain clients, but finality is. So if you have that 24/7 experience and you know that an immediate payment will get there within a confines of time without any lifting fees deducted from it, that could be, so they would be my two.
Excellent. Thanks, Una. Mark, closing thoughts.
Yeah, so I won't rehash all the old ground we've gone over. What I would say is be inquisitive with your banking partners and your payment providers. There's lots of really boring banks out there that have really cool capabilities. You just need to unlock them. So, in my experience, banks aren't used to, so they're getting better, but certain banks aren't used to selling to payments firms. You really need to dig under the hood and do your own work. And sometimes you might be able to link one capability from one bank with another one and provide something really cool that gets money from A to B. Like Una said, you know, speed, certainty is more important to our customers than speed sometimes, but speed's nice to have. Yeah, if you could do an instant payment and get your dollars out 24/7, that's really good. So don't be, there's lots of what people see as cool providers. I don't think cool's the right word, is it? We're only in payments, we're not rocket scientists. But there's lots of providers out there that's really boring. Everyone's offering the same sort of product, but they'll make it look nice and snazzy. Then you go to boring ABC bank and realize, oh blimey, they could do, you know, they've got 24/7 clearing in Hong Kong dollars or Hong Kong CNH, CNY. And you can take that. So be really inquisitive would be something to take away when looking at a bank provider. Don't be blinded by, there's a lot of hype in this sector as well. There's a lot of hype. So really dig to what you know, what can you actually do that's different from anybody else? And why are you charging me more for it is something that's usually to pay for the marketing team. And what else would I say? Yeah, we'll go back to basics. Make sure you know your place. You're speaking to the right bank about the right products at the right time in your evolution as a business. But be inquisitive. Look at the boring banks. I shouldn't give all this away, really. But that's my final points.
Great, thank you, Mark. And then Chris.
Okay, so again, in keeping with my tradition of sort of keeping it at the sort of technical, maybe let's call it plumbing level, essentially on the bank integration side of things. So, you know, if say, for example, in Una's case, if you're looking at the ability to be able to implement stuff internally to make things more frictionless, more streamlined, essentially look for platforms or solutions that have got the kind of the standard stuff out of the box, but provides the flexibility and the adaptability and the capability to be able to adapt those platforms and those flows and those solutions to your own specific requirements. For PSPs that probably don't have a great deal of internal capability or don't really want to build their own capability, look for vendors and suppliers that can provide that same kind of flexibility, but through standard sort of API consumption models in the cloud, maybe on a subscription basis with you know, with surety of cost, so to speak. And the other thing really is around a key feature typically of those platforms is that they will be ISO 20022 native. Okay, so anything that's not ISO 20022 native, I think in these days of ISO 20022 dominance is probably something that's not going to live very long.
Excellent. No, look, thank you very much. And maybe one more little bonus question, if I could, for everyone. It's a one-word answer based on the fact that this webinar was titled Build, Buy or Both. Would you build, buy or both? So maybe Una.
Both.
Mark.
Both.
Chris.
Both.
Ah, there we go. Clean sweep. Excellent. Well, I want to say a massive thank you to the panel for today. I think that's been a really, really engaging conversation, some really good points and hopefully some takeaways for everyone who's listening. I'm not sure if I've heard that many food analogies on a payments webinar, so maybe we can keep a track of that. We might be winning on that front, certainly to start with. And thank you everyone for participating and joining us today. And we will look forward to hopefully seeing you all in the future. And I think with that, I will hand back to Nicolina. So thank you very much, everyone.
Thank you.
Thanks.
Wonderful. Well, thank you, Luis, and thank you, dear panelists, for such an interesting discussion. Thank you once again for sharing your time with us today. To our audience who's watching us right now, I hope you all enjoyed it. And for any questions that we didn't manage to address during this hour, we'll make sure to follow up with you in a separate email. And with that, I would also like to remind you that we will be circulating a copy of today's discussion in the next couple of hours, so please look out for that email. Lastly, we would love your feedback. So if you could take a moment to answer a very brief survey that's on your main screen, that would be very much appreciated. On behalf of Form 3 and Connect Global Group, thank you all for tuning in, and we look forward to seeing you at our next webinar. Thank you and have a lovely day further.